Wild day today with the index just staying flat, but what we wanted to see actually happened. We have leadership. We're going to go through where we're seeing that leadership and what it means going forward. It's very important that we have leadership, but we made that new high. Now we're going to talk about what this high means, this particular close, why this August level is so important, and how this chart is setting up, what kind of pattern it looks like. We're going to discuss why regionals completely rocketed today right off that support level, which regionals are setting up to take out highs, the importance of this significant move on the stocks, why Tesla is not participating and looks like it's going to head lower. We have a lot to cover, so let's start jumping into it. Hey everybody, welcome back. So tonight's video is going to be filled with ideas, tons of stock ideas, and we're going to go through the indexes and what you need to take a look at. Now, if we take a look at just the ES, which we're looking at S&P futures on the weekly, we talked about this Saturday, this pattern. Where's the leadership? Well, we really don't have any yet, right? But the one thing that we wanted to see did happen today, and we're going to address that in a second. But as long as we stay in this range, maybe we can work something out. Now, reminder, tomorrow morning, you have retail sales. And there was a lot of really positive data today. But understand that retail sales can still hurt us tomorrow should they come in weaker than expected after we saw the consumer sentiment on Friday. Now we're going to look at the hourly here, and what we're going to see is we're going to see a little bit of a move here, right? You can kind of see this left shoulder, head, right shoulder, and that's there. So let's just deal with it. It's definitely there, and you can actually, I can drop this here, and you can actually see that, right? So let's not delude ourselves that everything is rosy and we're out of the woods. You can argue that we have an hourly head and shoulders on the S&P, and let's not rule that out. Let's not rule out this line that we're seeing as well here, and this DTL. We talked about that in the pre-market live today that's public. If you don't watch those, I suggest that you watch them, even if you can't attend live. Just watch them later, at least the first 10 minutes, because that's usually when I go over all the key levels of the indexes. So we have this DTL, we can all see that, and we have this head and shoulders. So I don't want to delude ourselves with what I'm saying here. And we're going to explain why this might be okay, why this might not be, the worst thing in the world. And I just want to go all the way back so you can kind of see this level. We've been fighting with this 4,200 forever. But if we come here and we just zoom in on this one section, it's pretty clear to see when this left shoulder is going to be busted, or rather right shoulder would be busted, right? You'd want to get over the high of the right shoulder. Well, that's going to put us right around here. So you're going to want to remember that level, 41.73. If you trade futures, you're going to really want to remember that. That would be confirmation that the DTL is broken, and you probably have a pretty clean shot at retesting that 42.10. That could happen tomorrow. Now we're going to be live again for retail sales when they come out. Sometimes we actually trade during it. Now let's talk about what's moving and what is not moving in the S&P before we get into some ideas here. So I touched base with this on Saturday, and if you haven't caught up, watch Saturday's video. I'll link it at the end here. And I do go into this in some detail. I go through 20 charts on Saturday. If you don't get the newsletter, link in description. And I would make sure that you get this newsletter. It was pretty packed with information on what levels to watch. But if we look at what we have here, we have a bear pendant. I mean, it's glaring. Here's your neckline. Can't get over. Boom, boom. Breaks down, rallies. Now we're sitting here and we're not breaking. And that's okay. It's okay if we stay still. It's not okay if we start breaking down. In other words, the last thing that we really want to see here is any kind of break from here where you just kind of come straight down there. I don't want to see anything like that. We're going to change the color of this so that it's a little more obvious. But what you're looking for, you don't want that. That's the last thing we want to see is some kind of break there. What we would prefer to see is some kind of test. In other words, I'd prefer to see a test come down, stop here, then come back up, and then kind of start building yourself until eventually maybe we pop over. I mean, that would be optimal, right? I don't know that we're going to get that. Now, we did have some good news today that's going to help the regionals, and we're going to talk about that. Let me put it out of the way. But if you want to talk about the regionals, which I do, so we're going to talk about the regionals. I think that if you look at this level, this was about as best as you could hope for, right? So you're all the way back here, the pandemic. You're hanging on by your fingernail, and you come here and you have a reversal bar. That is not the best chart in the world. A matter of fact, for lack lack of a better term, it's disgusting. Like there's nothing remotely appealing about this, right? You're rolling, you're trying to hold, you break the doji, you come to major support, you break down, you try to rally, you can only rally on these little dojis. But now you have this bar. So now we have to ask ourselves, okay, is that significant? Well, I think it's better than a stick in your eye, but I don't think that we should be going, absolutely crazy over this. I think we should monitor it and then go through the names that make the most sense to buy. You're seeing some short squeezes today, which are good, and we should go through a couple of those. So Wall was nice today to see this. I actually still have a short position in this, but this was nice to see. And if we can get some stabilization here, that would be great because there's a lot of money to make in these names if we can get stabilization on the long side. I just have seen really decent news be sold off. And even here, we should have rallied when they came out and talked about their deposits and how they recovered. And we just didn't really rally. And I'm a big sentiment guy, so I watch how stocks act on news. That tells me more about what to expect than anything else. So if I look at this, maybe we can get up to this 40, right? But that would get KRE up. Now, I like that idea, but we also have to be cognizant of PACW and understand that this is not around in 52 weeks. It's not. We're going through the same thing we just went through with FRC, where we have a bank down 90%. They're telling us that they can't make it and they need capital. They need some kind of buyout. And all the banks are going to do is just let it go to zero because they can buy the assets through the FDIC. And then the FDIC will insure those assets and then the bank can make a ton of money. Okay, that's one of the reasons why we bought NYCB, which I actually covered in the newsletter this weekend. So these are the two that you should focus on. If under my head, regional banks, we do not have the ability to research the intricacies of a regional bank portfolio like the FDIC does. We just don't have it. If you think about that logically, that means that if the FDIC not only clears a regional to bid, like it cleared NYCB, right, but allows them to buy assets, which it did. There's only two banks that they've allowed to buy assets like this, besides, your JP Morgan. We're in this in the Alpha Chasers community around 8.5. I have no intention of selling it. When it came down to 9, we actually bought more. Now, just take a look at those numbers. 1,500% earnings growth, 332% revenue. Okay, so if you take a look at this, which is April 23, and we just go out there and we'll go to this May, or this would be that April, and you just look at the difference. 370 million in revenue, and they made 30 cents. Okay, now we're making 280, and we're doing close to 3 billion in revenue. Now, they bought assets, but you have to look at this and go, the stock's at the same exact price. It doesn't make any sense. It's just sentiment. So after a while, this is going to trade up. In my opinion, this will take out highs. There's no doubt in my mind that this bank is going to be around for a long time and that we're going to go back to some levels up in here. It's just going to grind and take time. It's a regional. Now, they're not going to move like a NVIDIA or an AI, and we have a bunch of names to cover. But I really want to get this concept down because this is something that you're going to look back at in a couple years and not believe where you could have bought some of these. But the ones that you can sleep at night with are the ones that the FDIC has vetted, not only to bid, but allowed to buy assets. Now, FCNCA was another that was allowed to buy assets. You can see the move up, consolidation back, earnings, gap. These things are going to be monsters. They're going to be absolute monsters. So these are the names that you want to focus on. I would focus on First Citizens, maybe on a pullback, and NYCB. They're not going to go away. And we are starting to see some stabilization here. Now, maybe Schwab stabilizes, maybe, but that still looks like it's got a lot of work to do. I'd be more interested in the names that have absolutely nothing to do with what's going on. Like this IBKR is kind of I'll call it a dark horse that I'm kind of watching. I like the name. I actually bought it up here on the breakout, made like $1 maybe and on half and then just blew out of the rest. But if I look at this, I never really made any real money. But now I'm coming down to that 200 and I'm consolidating right in here. Well, that's what you want to see. That's what I want to see. I want to see that consolidation. Now, earnings weren't that great, but that's because of margin and things like that. So I'm not really sweating that, but understand that what we need for S&P, which is how we started, is we need XLF to sit here and not fall apart. I don't even need it to lead. But what we saw today, which was really interesting, is we saw XLB, which is supposed to be coming down, and we saw that hold the 200. And I'm not really sure why that happened, but it happened. XLE, extremely negative. It's hanging on by its fingernails. I'll give you one idea here that I think you really need to look at. Take a look at this Oxy. If you are looking to get involved in energy, you have an outside buyer. Everybody knows that Warren Buffett is slated to buy at least 50% of the company. It is glaring where his bid is. It is absolutely glaring. So you're probably going to want to watch this if you want to play these. To me, there's more money to be made in some of these other names we're about to go over, but take a look at this. Now, you start running through this, and the purpose that I'm getting at is, well, what led today? Well, XLK pushed. We made a new high. Now, it's not the greatest new high, but if you take a look at Apple, we really didn't get out of our way today. Well, Apple's 20% of XLK, so that's kind of interesting, but XLK's up. Well, it must be Microsoft, right? Okay, well, Microsoft's only up very, very little, maybe 40 cents. So what got XLK up? Now, here's where this gets really interesting. Microsoft and Apple, look at the weightings here. It's actually 50%. The weighting's actually greater. Well, we all know NVIDIA was up if we click on NVIDIA, right? We all know NVIDIA was up, okay? So we're aware NVIDIA had a good day, so that's going to pull us up. But what else is out there that's moving? Okay, well, AVGO is breaking out now. Look at that move on AVGO. Right? Let's take a look at Oracle because that's in the top 10. How'd Oracle do? Kind of hanging in there, right? Not doing a lot. CRM, okay? CRM kind of hanging in there, not doing a lot. Okay, so let's run through them. So here's Accenture. Accenture's up on the day. Adobe, which has been a drag on the XLK. How did that do today? We're up on the day. We're starting to see these names actually participate. And that's exactly what we want to see. Even the legacy names are participating. Okay, so yeah, they're not breaking out, I get it. But they're moving higher on days when Apple and Microsoft are not, and they're pushing the XLK forward. And that's the one thing that you need to take away from this today, is that we're seeing the breadth widen. We've been talking about there's no breadth. Well, we're definitely seeing it widen now. To kind of put it in perspective, in front of us is the S&P stocks above the 5-day moving average. Now, there's no easier way to see if the breadth is getting better short term than look at the 5-day average and percentage of stocks on the S&P. It's the easiest way to do it because if they weren't above the 5-day and now they are above the 5-day, that means you have buying. It's not rocket science, right? Don't overcomplicate it. But you started the day and you're down at 30 and then you're at 55. So you had a massive increase today in the amount of stocks that are closing over their 5-day moving average. So the breadth in the S&P is getting better. Now let's talk about the Nasdaq. Nasdaq's sitting here perfectly, trying to get back up to here. And my impression is that it's trying to get back up to here. And what we're seeing is this pattern, and everybody loves these patterns, right? They talk about them all the time, these little VCP patterns. You get tighter and tighter, and then you make these higher lows, right? And then they start getting tighter, and then they drop down, and here we are again, right? So when you see these, people absolutely love these kinds of patterns. It's because you're getting tighter and tighter against key levels. Now, we're going to talk about this and how to play these sometime, because it's hard when you're trying to play catch up like today. So if you take a look at these levels and you can see how we're stepping up, and then we just drop into the hour and then we just expand this out, right? And what we're going to find is that this is very different than what we were looking at with the S&P. So the S&P is weighted with financials and it's going sideways. Now, if we go out 30 days here, you have a completely different story that's going on with the Nasdaq. And frankly, this is the story you want, right? You want to have these levels here, and then you want to flip them. And that's what you're doing. You're hitting these levels, right? And resistances are becoming what? Supports, right? I'm sure you can all see this. So if we're looking at this and then the resistances are becoming supports, well, we just have to make sure that that keeps happening. And the moment that it stops happening, then we have to realize that, oh, well, maybe we need a little bit of a breather. Now, today we're holding these levels pretty nicely, and we're really watching that 13.5. That's really the level that you're going to want to watch there. You're going to want to watch that 13.5. That's kind of been one of our little nemesis, short-term nemesis for a little bit of time, and that's really the top of that doji. Now, tomorrow you have retail sales at 8:30, and we have 12 different Fed speakers once again. So I expect this to be volatile. But if we drill into this tweet by CNBC and we look at the comment, and I think this is really important. So Bostic is coming out and saying that we're going to pause. He's pretty much coming out and saying that that's how he's leaning. And if he's leaning that way, they're all leaning that way. And that we've already talked about the Fed tool. And if you get the newsletter, it's been in there about how the percentage has changed over the last week. So if we drill into this and what he's saying, bottom line is that we're hoping that we're past the worst with bank strains. It doesn't really inspire a lot of confidence. U.S. households, I do agree they are in strong financial position. I do think that the Fed is facing the hardest part of reducing inflation now. It's easy to get the top end down, but to start getting into the minutia, it gets harder and harder. And I do think that they're going to grind lower. I do think they're going to pause. And that was one important distinction today, that they're coming out and they're already guiding expectations. Now, again, we have several speakers out there, and we had the Michigan sentiment number that came out extremely low. Now, the data has not been loaded in here yet, but you came in at 57 on Friday. And the reason that we sold down was because that's a really bad number. 57 puts you at some of these levels where you had a financial crisis. I mean, you weren't even there. If you go back, you weren't even there during the pandemic, where you are right now. And that you literally have to go back to 1980, 1975, and this goes all the way back to the 50s. So this is an awful reading. And that's why people are going to be watching the number tomorrow, and they will be hyper-focused on retail sales to see how the consumer sentiment played into retail. I went into more on this on Saturday. I'll link that video at the end. So now we know what we're supposed to be looking for. We understand why this is moving. Now we have to start drilling into the breadth and figuring out what sectors are moving. And I think this is where it gets really, really interesting, for me at least anyway. If you take a look at the stocks, we put a position in the newsletter right around 14. I think the SOXL is at 15 and change. I'll take a look real quick, see where we're at. You have 15 and change. You held that 200. But let's go through this. So I've been closing at a 3-week high out of nowhere, right? You don't have great volume. There's not enormous volume here that we should be getting giddy about. But it was nice to see. We want to see follow-through days. Consolidation, follow-through days, pullback. That's what we want to see. I don't know that we're going to see that yet, but this is definitely a start in the right direction. And this is, I would say it was pretty powerful to me when I started seeing like the breadth of the move. You know, AVGO is there, they're involved. ASML, they moved back over 650. Lam Research, they broke out today. But we've been watching this one, if you've been following along, we've been watching this one, talking about it for weeks. And today's the day it finally just popped right out. So it's 20 points, $5 stock, $500 stock. So, I mean, it's not as big of a move on a percentage basis as buying SOXL. And that was kind of the reasoning behind it for those that are in the community that are listening to this. It just made sense on a percentage basis, candidly, because I didn't know which one was going to break out. You never know when the breadth widens, which one's going to go. And, you know, the SOX is going higher. NVIDIA did not hit new highs. So NVIDIA starts hitting new highs tomorrow, or NVIDIA breaks through 290, and we all know that area right here with NVIDIA, right? That 290.67. Now, we flip tomorrow, start hitting higher highs, and that pushes. The SOX could rip. Right? You don't have AMD and NVIDIA making highs right now. They held their own today, and they moved higher, but the higher high on the SOX, well, that was AVGO. That was Lam. You know, that's ASML. That's all these names, right? So we're getting the breadth of the market, and we're seeing a lift there. How about biotech? How's biotech doing? So biotech down, 1, 2, 3 up, and then breaks out, but we can't close over. So 88 is still a nemesis. We're unable to close over it, but you are seeing some signs that this might push. So we're going to want to watch this really carefully. If you're an investor, you're going to really want to watch this 200-day, and you're going to want to watch this DTL right here in LABU and watch how that plays out. For me, it doesn't get much clearer. So there's a litany of names to go over here. If you take a look at AI, we just had a great day with this one trading it. This is very clear that this 2050 level was going to be our support, and that's actually right where we got in at. And we should probably just talk about this. I mean, this is really powerful stuff. If you look at the pre-market, you hit that level, pulled back, rallied, and here's your test right off the open. That's all I needed to say. So in other words, resistance, then you come back and then you test it, and that was it, right? You always want to see that test. So you have your breakout, and there's the test, and then we rip. And we never really looked back. I mean, if you really look at this chart, you never really even had any weakness until you got up to here on 23.5, and then that red bar. Other than that, you really didn't have any weakness in this entire chart. And then we got to a main level today. Now, I closed when we got to this level. Some people are going to hold it overnight. I get a little nervous with secondaries, especially with these companies that are losing money, and straight up's not a pattern. So that gets me to just lock it in, ring the register, and move on. But watch that level. If you can get through 2387 tomorrow, that could continue to push. Also, comment on this video. You'll note that we're going back into individual names and sector rotation more than some of the macro stuff tonight, and that's because the market's changing. I mean, I really like this. I really do. I like when the market's changing this way because it provides us a ton of opportunity. But if you take a look at names like AI and those kinds of moves, I think that's important. You're seeing the NVIDIA moves, you're seeing the breadth come out, and all of a sudden we're not relying on what? What didn't we rely on today? Even though I added for like the 5th time today, I added more Google today. And I'm just building a position. I've been doing it since it's been down here. You start looking at these names. Well, we didn't need Google today. Right? We didn't need Microsoft today. This is a major change. This is a major trend change. The breadth is getting wider. Now, retail sales tomorrow and 17 Fed speakers throughout the rest of the week. Powell on Friday. It's anybody's bet. But the trajectory right now looks good, and we're seeing a broadening out of ideas. And I think that's really important, and I think that would be helpful. We don't need Microsoft, right? I'd like it to go higher. I own it. But we're seeing that change. Now, this leads me to Tesla. And why isn't Tesla running? Well, about a month ago, I went through this. I explained long duration names versus short duration names. Names that are going to move right now, that are the large cap names where people and institutions are going to put money, those names are going to have very strong balance sheets. They're going to be buying their own stock back in the market. They're going to have some kind of dividend that they're giving the shareholders, no matter what it is. Tesla has none of these qualities. Okay, their balance sheet is anything but robust when you compare it to some of these other large cap names. We're unable to get above the 200. There's no dividend to speak of. They're not buying their stock in the open market. So there's a lot of reasons why Tesla could do this and just continue to grind down. Now, I'm saying this as somebody that's short Tesla. I shorted today and did quite well with it. And I don't see any reason to change my thesis on it. To me, this was day one, and it made my life really clear, and I'll just show it to you. All you had to do today was when you rallied up and then you just broke right here. I mean, it was pretty clear, and I'll walk you through the trade and what we did with it. And I'll probably do a video on this trade because I do get asked a lot to do those videos of actual trades, but you can see right here, right? And I'll actually drill into this on a 1 because that's really what I was watching more than anything. Pull this back here. I'll show you exactly what I was watching. So all I was doing here, and you can see where that level is, but all I was doing is watching it. We watched the rally, we watched the second rally, and then that was it. And then you started to see it turn here. And then once it started turning here, I'm like, okay, well, that's it. And you could just see that it was getting weaker and weaker. And once we started breaking down here and you're getting all these dojis up here at that 170, we just put the trade on. I shorted it, and then I bought a bunch of puts. I closed some when this happened, and I'm sitting with a bunch of puts, and I'm still short stock. So I want to just get that disclaimer out there. But if I'm to look at this, I mean, from my perspective, looking at this chart, I really want to grill in on this so that you can see where I'm going. Like, there's nothing redeeming about this. I'm going back since 21, actually 2020, so you can just see the curvature. There's nothing redeeming here. And if this was any other name, we wouldn't even really be talking about it, right? We would just be like, oh yeah, that name didn't work out. But because it's Tesla, we're talking about it. But lower highs. I mean, when you really take a step back and look at this thing from 34,000 feet, is this something you need to be rushing into? Well, I mean, right here, I mean, you've actually got an island, and a gap down, and you have a real problem there. So I think you can get into the 150s. I think it's worth it. And you know what? The nice thing about it for me is the stop's not that far off. I'm really not that far off. If I start getting over 168 and I start being able to close over that open significantly, because the close today was 160, or the open was 167.66. I'll just get out of the way. So please comment on the video. Let me know what you liked, what you didn't like. Also, please let me know what names you're watching. There are times where you guys are picking up names that I just don't even pay attention to. And it's just because there's 8,000 names out there. I can't watch them all. So there was one today that was brought up. I'll give you an example with this OMH. And this is not on my radar. I'm not watching a $4 stock that's going to 56. It's just not, in my radar. But these kinds of names, they're a lot of fun to either watch or to trade around today. And just, I'll give you a really quick tip, and I gave this tip today in the room too. Whenever you have a chart like this, and I'll just show it to you. Whenever you have a chart like this and you have a gap in your chart. I highlighted it for the community when it happened. And most of the people in the community are aware of it at this point because I kind of drill it into them. But when you have a gap in your chart, like that constitutes a pattern, a candlestick pattern called a rising window. And it's because of the gap that's in there. When you have a gap like that, that means that you have no seller. Okay, just like if you had the gap to the downside, it's in the middle of the day and you have a gap. When you have something like that, you want to pay attention to it because that's telling you, and look, there's no volume there and they still had no seller. You want to pay attention to things like that. I'll leave you with that. Have a good evening, everybody. Trade to win.